some major technical difficulties. I'm hoping things are okay now. I went down to 720p. My computer's like freaking being crazy today. Maybe it's because I have like 5 million tabs open. I'm not really sure. But anyway, I think we're good to go here. I'm going to go on X real quick and just share, make sure that everyone knows I'm alive. Hopefully, everyone's having a fantastic day. Let me share this real quick. Boom, boom, boom. It's a beautiful Saturday. That's a little bit cloudy here, but still pretty nice overall here in Chicago. All right. Whew. Okay, so I'm going to cover a lot today. This is the newest with what's going on with Iran. Also, a date that's coming up that's really critical, actually, with the war that a lot of people aren't talking about right now, which I find kind of interesting. I'm sure they will in the coming days. You'll probably start seeing this in the timeline a lot this coming week. I'm going to talk about some of the broader stuff happening in macro, especially around robotics and AI. And then I'm going to talk about Warsh, an upcoming Fed meeting. Actually, this coming week, it's going to be Powell's last. And then I'm going to talk a little bit more about Warsh's plan and what I think is going to take place here. And then I'm going to get into broader crypto and what's happening there. Right now, actually, Trump's having his lunch or whatever for his Trump token holders. Justin Sun is allegedly not there, one of the biggest holders. There's a little bit of drama going on between him and the Trumps. So we're going to talk a little bit about that. And then I'm going to do a full run through of all the DePIN projects and what's taking place, some of the TGEs that just took place, as well as some other things coming through. Okay. I don't know what to do about this. What's up, Bobby? All right. Well, hopefully, it keeps saying I'm losing connection, and I'm not sure why. But it's a little bit frustrating. All right. Well, we're gonna as I go through some of these different tabs, I will close them up, and hopefully that helps a little bit because I'm not really sure what else to do here. I already restarted my computer and everything. That's why I was running late. All right, let's talk a little bit about what's going on in Iran. To start things off here. This is as of today. This is like just really in the last couple of hours, hour and a half. There are supposed to be maybe some peace talks today. Says that Trump canceled the trip to meet with the Iranians. He said too much time wasted on traveling, too much work. And he said there's tremendous infighting and confusion within their leadership. Nobody knows who's in charge, including them. And he said at the end here, we have all the cards and they have none. If they want to talk, all they have to do is call. Okay, so that's where things stand as of now. Markets, I mean, let's take a look here. I was just looking at like Bitcoin, I think was down a little bit, but it seems like markets aren't reacting too much to these headlines. And there are rumors that this is going to get canceled already. So I don't think anyone's like super shocked about the fallout of negotiations today. But you do have to start considering what this means. Crazy here. So there are some rumors right now that the U.S. might launch an intense surprise attack here pretty soon, and that Iran is preparing for that. So let's wait and see what happens there. The other big news, of course, though, is the energy problem. And, this is already, they're saying 4 times worse than any oil supply shortage we've ever seen. And obviously it's going to have massive implications. And we've been hearing about this for obviously the better part of like the last couple of months now. I mean, it's been this is right at the end of February. This all started. It was going to take 6 weeks or so to start really feeling the pain. We're in that period now, and we're seeing a lot of reports out there about how different countries are being impacted. But I also want to talk about the other end and how this is actually impacting the U.S. But globally, we're already seeing that Europe has been restricting flights. So we're seeing a lot of flight cancellations. If you look down to Bangladesh, there's people freaking panicking and robbing gas stations. So we're seeing crazy stuff all around the world. Australia apparently gets a lot of their oil. They import it from Asia, and they're saying that the government's trying to reduce any panicking. So that's a whole other thing that's taking place. And then South Korea, they're basically calling for everyone, urging everyone to save fuel as much as possible. In the Philippines, they have a national emergency where they're all working from home. So a lot of crazy stuff going on, and we're going to start seeing more and more rationing. What's wild though is like if you look at the price of oil, and I'm not even trading oil anymore at this point because the headlines change things so much. I mean, we're still under 100. Now, obviously, when this whole thing started, we were a lot lower. I mean, we were sitting at freaking, low 60s, below 60. And this obviously has caused prices to go up quite a bit, but we're still well off of the highs when we got all the way up to like $120 per barrel. Of course, the physical barrels are selling for a lot more. If you look at what people are actually paying for delivery of physical oil. But I don't know. This would be something to certainly keep an eye on if this gets drawn out. Now, it's not all bad for the U.S. And this is kind of shocking, actually, that Iran was trying to pay in other currencies outside of the U.S. dollar for oil. And this is obviously would be a huge thing for the U.S. dollar because the reason the U.S. dollar is the global reserve currency is because it is used in international oil trade because of the petrodollar. That's what really solidified it again after we got rid of the gold standard back in 1971. Now, if people were to start threatening that and starting to dollar usage is up substantially, actually. So it says that right now, the U.S. dollar is being used more than ever, and this is as a percentage of SWIFT payments. So an interesting outcome here, and there's some different reasons for that, but I want to touch on that. But it's really actually creating dominance for the U.S. So if we look at this, you'll see that a lot of these countries are turning to the U.S. now for either natural gas or oil because they're not getting it from because of the Strait of Hormuz. Now, on one end, we had Iran that was shutting down or not letting any tankers go through. But what the U.S. has done on the other end is they put up a blockade to prevent any Iranian oil from leaving. And I think that's putting some serious pressure on Iran because a lot of their money was coming from oil exports, particularly to China, because even though China is not supposed to be buying oil from them, they still are. And they're doing it outside of the US dollar. So it's not a shock to me that, this black market oil is being taken off the market. Same with Venezuela. I'm going to touch more on that in a minute. But we're seeing more and more usage of US dollars because they can no longer buy that black market oil. They're having to buy more oil, in particular from the US. And you're seeing this. The US is now exporting 5. Asia is signing long-term natural gas contracts with American supply. Okay, at least. Oh my God. I'm having some serious connection issues today. Hopefully my audio is coming through okay. But either way, we're seeing some really positive impacts from this overall. The other thing, because we are trying to hit them in their pockets, and there are some reports, and I haven't been able to verify this, that Iran's had trouble paying a lot of their soldiers. And I think part of it is that we're cutting off their ability to sell oil. The other part of this, though, is that apparently the Trump administration has frozen $344 million in cryptocurrency. Dang, man. So my audio is messed up. I don't know what's going on with my freaking computer. It's pissing me off, though. Okay, but yeah, this report here is that the Trump administration reportedly froze $344 million. Huge deal, too. So I think we're starting to see Iran, I think, is getting a little bit desperate in the sense that we're cutting them off financially. They're getting hit pretty hard there. And China is impacted in a big way here, too. So between Venezuela and Iran, China was getting roughly 17% of their oil from those two sources, 13 to 14% from Iran, only 3 to 4% from Venezuela. So this is a huge hit to China, who imports the vast majority of their oil. So fun fact about China, they only domestically produce about 4.32 to 4.34 million barrels per day. So they are reliant, 70 to 75% of their oil supply comes from imports. So China is getting particularly hit hard with this whole Iran conflict. Obviously, Venezuela is a big part of that too. So it's kind of crazy to see that, while, yes, oil prices are up, U.S. dominance has risen as all these countries are now turning to our oil producers, our natural gas producers. We're seeing the U.S. dollar being used more as opposed to less. And China is getting the brunt of everything right now, it seems. So I don't know, man. I'm not really willing to say this is 4D chess, because I think that there's a lot of shortages, not just in oil, but you have food shortages because of fertilizer. Pretty soon here, because of helium, the actual element, not helium, the project, that's used in microchip manufacturing. Guys, if we start seeing shortages in that could be a huge freaking deal. Same thing with generic drugs. A lot of that, the materials for all this goes through that strait. And we're starting to see potentially here pretty soon some major shortages across the board. So we're going to have to wait and see how this impacts everything. But by and large, it does seem like the U.S. is actually coming out better than everyone else in this whole debacle. Now, if we look at when this is, golly, the likelihood of a nuclear deal is 63% by the end of this year, 41% before September. So the expectation is this is going to be drawn out a little bit. But here's what's interesting. May 1st is a big deal here, because War Powers Resolution of 1973, or the War Powers Act, basically, this is what allowed President Trump to go into this without needing prior congressional approval. But this has to be done and tidied up within 60 days. Otherwise, he will need Congress to authorize continued action. And that puts us right at May 1st. So if this is not resolved by May 1st, he needs congressional approval to continue in this war. Now, there is a way that he can request a 30-day extension for safe withdrawal, but this is not intended to prolong combat. So I think Iran also knows this, right? They got to hang on for another week before Trump would need congressional approval to continue this war in Iran. Guys, this is like 6 days away. So let's see what happens there. And would he be able to get congressional approval if we hit that May 1st deadline? So I think there's a chance that Iran might just be trying to wait this thing out to see what happens, knowing that this date and this deadline is coming up. So this is something I haven't seen many people talk about, but an important deadline coming up this week. So May 1st is that date officially that congressional approval would be required. All right, let me close out these freaking tabs, see if this helps a little bit. All right, cool. All right. I think as the stream goes on, we will get better and better. And My technology will stop messing up so badly. Oh, who else we got in the house here? He said it will stabilize. I hope maybe you're talking about my internet. I don't know what you're talking about there. Hopefully it's no longer stuttering, George. We'll see. All right. Follow up on something I covered a little bit yesterday. Let's share this story. Boom. Let's get this over here. So I read in a little bit more about these drones that were stolen. Because this is kind of a big deal, man. So there's 15 chemical spraying drones stolen in New Jersey. FBI is investigating a possible what they call nightmare scenario. So there's 15 giant agricultural drones were stolen in New Jersey, and they're concerned these could end up in the hands of terrorists. So the fleet of these Air C-31 drones, they're about the size of an ATV. These things are freaking massive. Were ripped off on March 24th. So this is like a month ago by a bogus delivery driver. Apparently, he duped the shipping logistics company. He had a phony bill of landing that was presented at pickup and was bolstered by a fake confirmation email. So this thing was pretty sophisticated in the way that they stole these drones. Here's the deal, though, man. These things can carry and spray up to 40 gallons of liquid chemicals, such as fertilizers, pesticides, and unleash a payload of over a 15-acre span in just 7 minutes. That's freaking scary, honestly. What's also wild, so it says the Bureau's freaked out and for good reason. These are massive drones. This was interesting, though. It says that this is from 2020, an Army manual on drone warfare said an agricultural drone becoming a chemical or biological warfare delivery platform is a definite possibility, especially for developing nations. So, y'all, this is kind of scary, frankly. I mean, let's hope nothing comes of this, but I'm just surprised that it just started getting in the news. Like, this was just updated on and published on the 25th. So this is an article as of today. So we're starting to see this get some coverage, but freaking let's hope that nobody is using that for nefarious purposes and they just wanted to steal it for their farm. Let's hope. Let's hope. In some other drone news, this Chinese electric vehicle maker XPeng is going to start large-scale production of flying cars in 2027. So the Jetsons is finally here. How about that? That's freaking cool, man. I just wonder, like, what are they going to do to be able to manage the airspace if people are just flying these freaking things around everywhere? I don't know, man. That's kind of scary. You start seeing like these freaking cars flying they're falling out of the sky. But speaking of China, I covered this the other day, but all these missing scientists in the U.S. Apparently, the same thing is happening in. So there's a series of deaths of Chinese scientists that have been flagged amid investigation in the U.S. cases. So it's not just happening in the U.S. It says that as the House Oversight Committee launched an investigation into the disappearances and deaths of more than a dozen American scientists, there's questions being raised about the fates of several Chinese scientists. So at least 10 have died under what some are calling suspicious circumstances. So freaking, I don't know, man. This stuff is weird. Says that their deaths involved suicide, sudden illnesses, and car crashes. Sounds kind of sketchy. And in the U.S., obviously, that investigation is ongoing right now. But this one highlights all of them. But there's another one this week too, I think. But July of 2023, this is a NASA researcher passed. July of 4th of 2024, another one that passed, space research. May 2025, this guy just disappeared. Still is missing. June 22nd of 2025, disappeared while on a hike. We're seeing a lot of these people are going on hikes and just never disappearing into thin air. No one can find them. What the hell, man? This one, June 26th of 2025. Another one just disappeared, like worked from home that day, and she's last seen walking along a highway. That's weird. August 28th, 2025, disappeared. December 16th, 2025. This one was the MIT professor that was offed at his home. That was tied to, I think, some other ones too. This one recently, this last December, they just found his body. And then February, this one was murdered as well. He's a NASA scientist. And then recently, February 27th, 2026, that was the retired Air Force general that disappeared. April 16th, so Trump came out and addressed it, and they are looking into this. Oh, there's another one, April 20th. I guess it's like the FBI is looking into this, but there's another one. There's another guy that was like research scientist. They said that this last summer was in his Tesla, and the Tesla just like caught on fire. Apparently, I don't know, man. This is super sketchy. So they're investigating. We'll see what comes of it, but seems like a huge coincidence for these people just be like disappearing left and right. And a lot of them are like scientists that work with NASA. Some of them are like UFO scientists. It's like, what the hell is going on there? So I'm sure we'll see more of that. It's starting to get some serious coverage now. This report came out. U.S. fertility rate falls to a record low, 53.1 births per thousand, every 1,000 women aged 15 to 44, the lowest ever recorded. Freaking pretty nuts. Let me pull up this chart here. Hopefully it pulls up here. But it's not just the U.S., man. This is a worldwide phenomenon that we're seeing. And there's a lot of different reasons for this. I mean, if you look at the reason why people aren't having children, finances is a big one. What the heck's going on here? I'm not gonna open up this page anymore. So it's clear my cookies. I don't have any cookies. Let me go to Google real quick. Boom, boom, boom. There it is. All right. So take a look at this chart. This is globally. This is the fertility rate or birth per woman. That's freaking nuts, man. This is on a global perspective. I mean, the U.S. chart looks very similar to this, but what they're finding, and this is kind of wild. So fertility issues is one of the top two reasons, and a lot of it is male. So male infertility contributes to approximately half of all cases of infertility and affects about 7% of the male population. What they're finding is that sperm counts fell by an average of 1.2% per year from 1973 to 2018. So it's dropped by, I mean, fertility in sperm count in men has dropped by half. It's been cut in half. And from the year 2000, the rate is accelerated to dropping 2.6% per year. So they don't really know exactly what's causing it. Certainly, some of the studies have shown, though, that one of the big problems, at least, is the, it says poor health in men. We're facing a public health crisis. We don't know if it's reversible, but some of the studies showed that the microplastics are probably a big reason why. So there's a study that was done that they researched concentration on chemicals found in plastics, fire retardants, and common household items. And it's disrupting hormonal systems and harming fertility. So pretty wild, right? This fertility issue. Yes, people are having less kids because of costs, which I'm going to show you that in a second too. But a lot of the fertility issues are in men. And to have fertility and sperm counts drop by more than 50% over the last like 30 years, shit, man. The microplastics, everything in our diet, I mean, I'm sure all of it's contributing, but that is certainly concerning. And the cost side of things too, Right now, it says to raise a child to age 18 now costs more than $303,000, a 27.8% increase since 2023. So it's also become very expensive to have children, obviously, and that's assuming that your child is no longer costing anything after 18. Which, let's be real, that's not the case, man. Like 18. I feel like it's more like probably 25. Most parents are still supporting their children, sometimes even longer than that. But it's just gotten to be super, super expensive. So between the fertility issues and the cost of having children, we're seeing birth rates drop significantly. And for a time, the thought was that they would only be able to offset that using immigration. And that's one way to do it, because obviously the big problem is if you have an aging population, you don't have enough young people working and paying taxes, you can't support all the programs that the aging population needs, right? You need to have enough tax base. Well, of course, the other thing that's emerging here, though, is robotics. And that's a big reason why China has invested so heavily into robotics, is because they have such a low birth rate. So speaking of robotics, let's dig in on that. We are seeing humanoid robotics. So Figure AI, of course, is a US-based company, but check out their increase in robot monthly production rate. They are scaling. Okay, and it's not just them. We're obviously seeing it in China as well. We have this UB Tech, 112 million in their Walker S2 orders last year. They're looking at 5,000 units by end of year. Right now, China has a stranglehold. 80% of humanoid robots shipped globally last year came from China. I mentioned this a little bit yesterday in my short live stream, but they're taking a slightly different approach. They're just trying to manufacture these things, ship them out, making them open source so that software developers can input their software and make them do useful things. US taking a little bit of a different approach where it's a closed-in system. The manufacturers, like Figure, are their goal is to ship to you this robot. You take it out of the box, it can do things right away. Okay, that's going to take a little bit longer, I think. But regardless of all that, the robots are coming. And of course, it's not just humanoid robots. The one thing that's going to impact all of us the most is freaking self-driving vehicles. The Cybercab has started production. People are sleeping on Tesla right now, man. Like, yes, their vehicles are going to be a big profit center for them. Uber is worried. I can guarantee it with the Cybercab coming out. It sounds like they're going to have a couple different models. I think they're going to have one that has a steering wheel, one that doesn't have a steering wheel. But this is going to start rolling out all over the country, man. And they're going to drive down costs to where vehicle ownership is going to drop off a cliff, I believe, especially in major cities where it costs to keep your car in a garage, right? Where you're not traveling long distances, where you have to pay auto insurance and pay a car payment. It's going to get to a point when they remove the labor component that it's going to be cheaper to just grab a Cybercab than own a vehicle. And I think we're going to see this major shift coming. So huge for Tesla. And the other thing they're working on, which is freaking wild, is robotic limbs for amputees with Neuralink chips integrated into them. So like some of the stuff they're working on is wild. And I do, based on some of the research I've done, some of the books I've been reading, like I think if you look like 10, 20 years down the road, Tesla will be known as a robotics company. I think they're going to be, yes, cars will be part of the picture, but I think humanoid robotics and their Optimus is going to be what they're known for. And that's going to be their biggest profit center, and why I think the stock right now is likely undervalued, because they're going after a $50 trillion market. The labor market is a $50 trillion industry. And that's why you're seeing all this money flow into robotics, because people know like that is the big one, man. Like the auto industry, I think it's like a $2 or $3 trillion market annually. Physical labor is 50. Okay. So like night and day difference in how big the total addressable market is, but freaking nuts. And then I did talk about this the other day, but you think about he has the humanoid robots. He has the Tesla vehicles, right? On the robotic side of things, collecting data constantly. And I don't know if y'all saw, but SpaceX recently acquired XAI. His goal is to start training AI in space. So instead of having the AI data centers on Earth, he plans to, using SpaceX, put these up in space. He has solar technology under Tesla to power it, where you get 24-hour sunlight up there. You don't have to worry about the cooling systems like you do down here. Like roughly 40% of the energy used for these AI data centers is in cooling costs. So if you remove that aspect of it, you have training that can be done in space. And then he has Starlink that can communicate the data back and forth. I mean, it's freaking nuts when you pull it all together, everything they're working on. So, man, it is freaking crazy. But that is where things are headed. So humanoid robots and robotics in general, whether it be drones, whether it be humanoids, whether it be self-driving vehicles, all of it is going to be massive, and it's hitting a huge market. And the data is so important. We're going to talk more about that in a minute. But I do want to talk about the Fed here, get back into some macro, and then we'll move into crypto. Guys, we have, let me close those tabs now. It's getting smoother and smoother as we go. Close. My goodness. All right. Supposed to be going better. All right. We're getting less and less tabs as we go through. Guys, we have on April 29th, in 4 days, we have the next Fed meeting right now. The likelihood, you're going to probably start seeing people post like, oh, a rate cut's coming. It's not coming. This is Powell's last meeting as the Fed chair. So his tenure is basically up. May 15th is his last day in his job, but this is his last meeting. Of course, there's 8 per year where they announced rate cuts or rate hikes. They can have like emergency meetings, which is very, very rare. It's generally 8 per year. You can see here, pretty much 100% chance of no rate change coming. Okay, so at least not a rate hike. Okay, that could be, he could do that as like an FU out when he's walking out the door. But for him, man, he's a senior on going into summer break. So last meeting, it'll be interesting to see what he says. But all that to say, here are the meetings, right? So we have this last one under Powell, and then we have 5 meetings the rest of the year. We don't have one in May, but June, July, September, October, December, all under Warsh. And the big question is, what is Warsh going to do as the Fed chair? And that is the question everyone's asking. Well, if you look right now, here's what the Poly market or the betting odds are saying. That this is for the rest of the year, by the way. 39% chance of no cuts the rest of the year. Again, we've got this one coming up this week. Last one under Powell, and then we have 5 more this year under Warsh. There's a one cut, 29% chance. And then looking very unlikely to see 2 or 3 according to the prediction markets. Now, this is good news because that means that if we do have 1, 2, 3 cuts under Warsh, it's a lot of upside the market has not priced in yet. So a lot of room for things to move up if he does indeed come in and cut rates more. And that's a big question. What should we expect? Well, here's what he had to say about that. Let me pull him up here.
We call AI in a couple of years, we'll just call business. And AI is going to make almost everything cost less. And the U.S. can be a big winner. And it's a hugely exciting moment. If I were to step back for a minute, if I were the president, what I'd be worried about is a central bank that doesn't see any of that. A central bank that is stuck with models from 1978, governance from a prior period, and don't recognize we could be at the front end of a productivity boom. And if I were the president, I'd be worried that they might not see it. And they might think economic growth is somehow going to be inflationary. I think we were probably in the early innings of a structural decline in prices. Ken sees it on the front lines of real businesses. And I think if you look over the period of the next year or two, it's a pretty special moment.
All right. That's a big statement, y'all, because Powell, I don't think was taking into consideration AI being deflationary. And Warsh is looking at this. And in fact, when I did some research on him, I covered this on some live streams late last year. In some of his interviews, he's felt this way for quite some time, but some of his interviews from like a year ago, he talked about how he kind of compares this to what we saw in the dot-com era. But this technological revolution is going to be very deflationary. That's important because that means that he could have room to cut rates. Okay. And he talked about the need to update our systems because the CPI that our federal government and the Fed goes by currently tends to be very inaccurate and very delayed. A lot of it's survey data, and the respondents to these surveys now, it's like the lowest percentage of respondents we've ever seen. But a lot of the data is, again, trailing, especially like housing data. It's like 6 months delayed in many cases. And that's a huge percentage of what the Fed's going off of. And they're making these decisions based on delayed and incomplete data. So he's talking about changing the systems that we use. Well, one that a lot of people talk about is trueflation. So trueflation has no ties to the government, but they use a lot more metrics. They use real time instead of like survey data. They're using real time metrics for costs across the economy. And right now it says that delayed by 5 days, but because I guess I have to do a paid version. But regardless, this is right now showing under 2%. 2% is the Fed's goal. That's their target for inflation, right? And that's where I think also a lot of people have this misconception, like, when people talk about bringing costs down, certainly there are things like we saw eggs, right, last year because they killed like 1 million freaking chickens. We saw egg prices had gotten crazy inflated. Like that type of stuff can come down in certain, subsects, but they don't want inflation to come down. Okay. They want 2% inflation per year. A big reason for that is if we're seeing the costs of goods go up, that generally leads to GDP growth. That means more taxes. Okay. So the government traditionally, when they issue debt through treasuries, they would like that inflation would outpace their treasury rate they're borrowing at, because that means that they're able to borrow at a lesser cost than costs are going up. So their whole goal is that the amount of tax revenue they can bring in from costs going up can exceed their borrowing costs, essentially. But regardless of all that, this is big news because this means that Warsh may be looking at ways to cut rates. And right now, the market's not pricing this in. So if he does look at AI as being deflationary, if they update the metrics in the way that they're looking at inflation, that could change the game completely. And I think that not enough people are pricing this in. Again, that's good. If the markets were already pricing this in, that would mean that there's not a lot of upside left. In this case, it's not being priced in, which means there's plenty of upside left. The other part of it, of course, the Fed has the ability to raise or cut rates. The other thing is the Fed balance sheet. And we're starting to see this type of stuff get posted, right? It says the U.S. Fed total assets reversal, bullish for risk assets. After the bear market is over, Bitcoin will fly. And they're showing this chart that looks like this crazy increase, right? This crazy turnaround. I mean, while it is true, yes, you can make it look that way. But what he did there is he basically zoomed in on this little area right here. And then he took this chart and kind of like smashed it together to show like this crazy, turnaround. When you zoom out, it doesn't look nearly as cool. I mean, this is the little area. Let me move this over here. See, my head's in the way. Let me make this full screen for you guys for a second. So he's highlighting this little tiny blip on the radar right here to show this major turnaround. But this is a big deal. So let me walk you through this Fed balance sheet. So basically, this is the Fed holding treasuries. Okay, so if they're buying up treasuries from the market, it means they're pushing cash into the market to buy these treasuries and hold them on their balance sheet. So this is liquidity entering the market. All right. So we saw, historically, we saw the Fed hold a small amount of treasuries. And then look at in 2008, this is when quantitative easing started. This is when we started buying up our long term debt to push liquidity into markets and to force rates lower. Because if we create demand for, if we go to the market and buy up a bunch of 20 and 30-year treasuries, the more demand for your treasuries, the more the rate goes down. Basically, all that is the government financing its spending, right? So if they're issuing debt and they're like, hey, we'll pay you X percentage on this debt, the more demand there is, the lesser percentage we need to pay out. If we have an influx of buyers stepping in and we say, oh, we don't need to pay you that much of a yield, right? So if we step up and buy up our own debt like we did in 2008 through QE, you see our balance sheets expanding. Again, that's us basically putting liquidity into markets. Now, what's interesting is Warsh was a Fed member at this time back in 2008. And he was for the QE to begin with, but he was very against the prolonged QE that we saw. And he was outspoken about that. Now, what have we seen over time? We've seen that we've continued to buy more and more debt to push liquidity into markets. And of course, in COVID, we saw the crazy print. We went from holding $4 trillion in assets under the Fed to about 9 trillion. So we more than doubled. And this was, again, us pushing mass liquidity into markets. I mean, freaking crazy. This is why, if you think back to what we saw in the last market cycle, remember in 2020, 2021, when altcoins went crazy, everything went crazy. Well, he printed a shit ton of money, and you'll see this upward trajectory. Guess what happened, though? We saw the Fed start to end this and start quantitative tightening, basically pulling liquidity out of markets, okay? And they started backtracking on that. Well, when did they start doing that? They started doing it right in spring of 2022. That also happens to be when the bull market ended, right when they started pulling liquidity out of markets. You see this little blip here, this little move up. That was, let me actually zoom in on this so you can see it a little bit better. So again, this was COVID print. Fed decides to start raising rates. Remember, Fed Powell said inflation's out of control, start raising rates, and they started QT at the same time. So raised rates pull liquidity out of markets. This marked the top of the market in 2022. It's when we saw the bull market end effectively. This little bump right here was Silicon Valley Bank. You guys remember we had the banking crisis in 2023. We bailed out our banks. So that was that little bump up. But otherwise, we've seen a complete drop off now for multiple years, really since 2022 up until now. So 4 years effectively of quantitative tightening. And now we're seeing reversal for the first time in 4 years, which is good for risk on assets. But one of the things that Warsh wants to do is decrease, right? He doesn't like the QE, doesn't like the Fed holding so many treasuries. He wants to decrease really to where we were post or pre-COVID. He stated this, like he doesn't want to bring down to zero, but to a more manageable level. I believe he said, the economy has grown. Doesn't have to get all the way back to where it was before COVID, but I would imagine over his tenure, he would like to get us back down to, $5.5, $6 trillion versus where we're at today. And that would mean, in some ways, you could look at that as them pulling liquidity out of markets. And that's where a lot of people freaked out. If you guys remember back when it was in January, let me pull myself back up here. So back in January, when Trump first said he was going to appoint Warsh, remember when everyone was freaking out, gold and silver were going their parabolic runs up, and the US dollar was losing strength. As soon as Trump announced Warsh, everyone sold off gold and silver. It had been like way overheated, let's be real. And the US dollar strength went up a bunch. And that's because of this. The fact that Warsh says he wants to reduce the balance sheet. So what that means is instead of us printing money and buying up our debt, it means that he wants to change course there. And that is deflationary. That adds strength and confidence in the US dollar if we don't keep doing that, because let's be real, that's not good. That's what Japan's been doing forever. They were just printing up, Bank of Japan was just printing money and buying up their own debt. It's like you running up a credit card and having a freaking printing press for dollars in your house and printing money to buy up your own spending. That's what we are doing. So the fact that the notion is that Warsh wants to stop that, everyone's like, hey, okay, that's a big deal. That gives us confidence in the US dollar again. That's why gold and silver sold off. And that's why we saw the US dollar index start increasing. Now, here's something that's interesting that I don't think people are paying attention to. Yes, we want to reduce the Fed balance sheet. Warsh does. That doesn't have to mean pulling liquidity from markets. And what I think the plan here is for them to actually remove our balance sheet. Let me pull this back up again. Their goal is to remove treasuries from our Fed balance sheet, but have our banks instead buy treasuries. And they want to shift our holdings over to our banks. And the way they're going to do this is something called the SLR, supplemental leverage ratio. And this is something that there's an article about this. This is a huge freaking deal, though. So this is last summer on June 25th, Federal Reserve quietly announced a significant change to the SLR, supplemental leverage ratio. While the headlines were muted, the implications for the U.S. Treasury market were anything but. So up to this point, there's the SLR, supplemental leverage ratio, was very restrictive in our banks being able to hold treasuries. So they held treasuries, they weren't able to lend against those freely, essentially. It kind of counted against them. What they're doing is they're changing this now so that our banks can buy unlimited treasuries. Okay, this will allow the Fed to basically unload our holdings onto our banking system instead. So they'll hold treasuries, they get a yield on it, but they can also create credit against those holdings. So it does two things. It basically makes them the Fed, right? Instead of our Fed having to print money and push liquidity into markets and hold treasuries, our banks can do that. So they'll be able to hold unlimited treasuries and create credit, which is basically money printing. And at the same time, reduce the Fed balance sheet. So from an optic standpoint, it looks good, right? It makes it so the Fed's not the one that's holding the bag. It's just basically moving it over to our banks. And guess what? The Fed's still there. If our banks ever have like a major failure, the Fed can still step in and backstop them. So it's strictly like an optics thing, honestly. Now, the whole deal here, though, is like if they do this and they do it successfully, it'll restore confidence in the US dollar, where it'll also increase demand from treasuries from other entities, whether it be other governments, whether it be companies, US companies, whether it be individuals. So if people start to buy more treasuries, that'll also push yields down. Again, more demand to buy them, the less yield the US government has to pay people in order to buy up that debt. So that's two things. So the other one, though, is the freaking stablecoin issuers. So you think about Circle, you think about Tether. They have to hold treasuries to print or make stablecoins and put them on chain. So that's another big buyer. That's a big reason why they want to pass the Clarity Act, because if we pass the Clarity Act, that's a lot more stablecoins coming online. So that's another buyer of US debt. So you can kind of see this whole picture where Powell's on his way out. Warsh is looking at AI as a deflationary force. So that should give him room to cut rates. He wants to reduce the Fed balance sheet, which will restore confidence in the US dollar, but shift those treasury holdings to stablecoin issuers in our banks. And our banks will then be able to create more credit and push liquidity into markets, whether that be through lending through loans to businesses to hire people, whether that be to people to buy houses, buy cars, etc. So that, I think, is their big plan here. And of course, he has another thing coming up that I think could help him, and that is the fact that our reliance on AI, I mean, this is freaking nuts. 45% of the S&P's market cap is tied to AI-related stocks at this point. So that percentage has surged 20 points, so 20% since ChatGPT launched in November 2022. So no doubt there's a huge bet on AI at the moment, but here's the other end of that. That's, of course, that the layoffs are taking place. Microsoft is offering exit packages. So voluntary retirement. They want to get 7% of their Microsoft has 7% of the U.S. workforce. No, that's not right. But that can't be right. That's definitely not right. No. But they are offering voluntary retirement programs. So must be 7% of their U.S. workforce that they want to force into retirement. That makes sense. Meta is laying off 10% of its workforce. Right, we're seeing a lot of these layoffs take place. That gives Warsh more room to cut rates. So that's a huge freaking deal. Bobby says, when are you talking about DePIN and crypto? Guys, I will get to that, but this is important because crypto and DePIN projects are not going to go up if we don't cut rates and if we don't find a way to deal with liquidity in the markets. So without that, dude, because this is the most risk on assets out there, none of that shit matters. Crypto will freaking plummet if this other stuff doesn't get taken care of. So it's super, super important. But again, more room to cut rates. If the job market's weakening, if inflation's not a problem, rate cuts. He has a plan now to push liquidity into markets by reduce the balance sheet for the Fed. Guys, that is all really good for risk on assets for crypto and for DePIN. So massive, massive stuff. All right. Let's move on. Oh, you'll be excited, Bobby. We'll talk about crypto now. But the other stuff is as important as anything, man. Like, there is no bull run. There is no crypto liquidity without that stuff happening on the macro side of things. All right. So a little drama here. This is Justin Sun filed a lawsuit against Real Liberty Financial. Of course, that is the Trump Son's company. He did make a statement here, though. He said, "I've always been and remain an ardent supporter of President Trump and his administration's efforts to make America crypto friendly. This lawsuit does not change how I feel about Trump or the Trump administration. But bottom line, what happened is Justin Sun has a huge stake in Real Liberty Financial, and they froze his tokens, so you couldn't sell them. He's pissed. And there's been a little bit of back and forth between him and Eric Trump. And Eric Trump said, shots fired here. The only thing more ridiculous than this lawsuit is spending $6 million on a banana duct taped to a wall. So that was something, as you see here, Justin Sun bought this for $6 million. But what's funny is Eric Trump's in the picture smiling with him, holding the freaking banana. Like, how unserious is this space? Either way, the drama is unfolding there between Justin Sun and the Trump family. And although he is one of the Trump token's largest holders, apparently today, this is happening right now, Justin Sun is so far a no-show at the luncheon that Trump is scheduled to speak at. I guess that was earlier today, so he probably has already spoken. How is the Trump token doing? Well, down 21.5%, wiped out 161 million in the past 24 hours. This is actually probably a really good short looking forward. Anytime he has these luncheons, these dinners, people buy tokens leading up to them. And then just before, there's normally a huge sell-off. We've seen this many, many times now. Says that this came after investors sold before Trump's crypto conference, a classic sell the rumor event. That's not the only reason. Over the past 3 weeks, the Trump team has deposited $46 million worth of tokens to exchanges. They're dumping on everyone. As of now, Trump is already down 96.5%, wiping out $18.1 billion from its market value. This should piss everyone off, honestly. Like, what a fucking grifter, dude. He stole money from, basically came in with this Trump token, stole money from retail, World Liberty Financial, same shit, man. Like, Trump has been a huge net negative for crypto, in my opinion. Yeah, we got the Genius bill passed, but like, that doesn't really do much without the Clarity Act. And I'll talk more about that in a minute, but I don't know if the Clarity Act's going to get passed. And if it doesn't, then he's been an epic failure for crypto. Seriously. So like, hopefully it gets done. Otherwise, like, screw him, man. Like, he really screwed over crypto in a big way and stole money, dumping on freaking retail's head. Sucks, man. Sucks. But how about Sam Bankman-Fried? Have you guys been paying attention to these freaking investments? It's been nuts. So it says here, Sam Bankman-Fried did nothing illegal, which of course he did. He did take people's money to invest it. But man, he chose some good damn investments. I'll tell you what, dude's freaking genius on that level. Now I've seen both ends of this. People are like, well, if you have unlimited opportunities to invest and you're using other people's money, of course you're going to hit on some. But still, I mean, these are pretty epic. Cursor, which was just purchased, I think it was purchased by Anthropic, right? There's a 200,000 investment that'd be worth $3 billion today. Anthropic, $500 million investment would be worth $82.3 billion today. SpaceX, 200 million to 15 billion. I mean, this is freaking nuts. Solana, 189 to 5.1. All in all, if he'd done nothing wrong, of course he did, he'd have an estimated net worth of 114 billion with a B dollars. That is pretty crazy, Mr. Sam Bankman-Fried. He's definitely a smart guy. I mean, he worked for like Jane Street. He was their top trader there for a couple of years. He also went to MIT. I mean, guy's like super genius, but unfortunately, what he did was not legal. How about this clip? This is the first admission of the United States is running a Bitcoin node.
We have a node on the Bitcoin network right now. We're not mining Bitcoin. We're using it to monitor, and we're doing a number of operational tests to secure and protect networks using the Bitcoin.
So that's pretty wild. The U.S. is running a Bitcoin node. I don't know exactly what they are doing with that, but I thought that was quite interesting. And then Pakistan announced the removal of its 7-year ban, saying that crypto asset class is a tool of the future. So, guys, we're seeing smart money accumulate. Institutional interest is there. Retail is dead. Ever since October 10th, retail's been out. I was watching an interview about this the other day, and the big question, I think, is like, when is retail going to come back? When can we expect altcoins to take off again? And one of the big problems, I think, for crypto is that the volatility hasn't been there. Since October 10th, everyone got washed out. Retail's been gone. I mean, you look at the stock market, there's a ton of volatility right there. You look at like what gold and silver have done. There's so much volatility. And that was one of the big, reasons why people got into cryptos, because there's a lot of upside there. But, that's just not there right now. So I think we need to see some renewed interest. Institutional money being there is great. I think that's why Bitcoin bottomed at 60K. Doesn't mean we can't go lower, but I think if institutional bid wasn't there, we probably would have dropped, seen our normal 80, 90% drop. I think those bids are what have kept us up, but there's no doubt retail is not there. And I don't know that it's going to return this year. I hope so, but they're speculative. That's one thing. So much great about Deepin though is that there's actual revenue. You look at Hyperliquid, a lot of people talk about Hyperliquid because they're using their revenue to buy tokens and burn them. That's why it's done so well. And everyone's like, well, there's no other projects that are doing that. No other protocols that have real revenue. It's all freaking speculative. It's not true. A lot of the Deepin projects that people are sleeping on, obviously, have a lot of upside. How about this? I saw this video, so I won't bore you with watching this whole thing, but he talks about how anytime someone says, this guy never misses, okay, whatever. Everyone misses. But regardless, he goes through the cycle peak and mid-cycle high, and he's making the argument that we just saw the mid-cycle high here. We're at the mid-cycle bottom at the moment, and the big peak is still coming. A big part of his thesis, and I've talked about this before, is the ISM PMI, manufacturing PMI. And you'll see here, like we have been above 50 now for 3 straight months. This is anything over 50 is expansionary. And if you look at this, every time it's been over 50, it has correlated with our normal market cycles. You'll notice here, 2021, and then obviously we dropped out in 2022. Well, what else happened there? That's when, as we just showed, the Fed started raising rates and started QT and pulling liquidity out of markets. And then we saw our economy contract. Well, we're finally, for the first time since the last bull run, seeing expansion that has bode well, generally speaking, for crypto. And that's why this guy is making this connection here. Like, hey, we're finally, and that's at the bottom of the screen there, he's showing the ISM PMI down there. We're finally back into expansionary territory. And that's why he believes that, we are
since 2000 and
moving back towards this next cycle peak. And this is a prolonged cycle. Raoul Pal has very similar feelings about that. Let's see what happens. Right now, I'm not really trading. I do have a short open on Bitcoin actually, but I'm not doing too much active trading. It's a small one with a tight stop loss. It's up like 20% right now. Mostly, I just opened up a quick short to scalp based on the news that the negotiations with Iran were canceled. So not a whole lot of movement. I have, again, I got like a 15-20% return right now on it. I've got a stop loss in place that will lock in some profit if we see it move back up. But I think we're starting to see some of these headlines aren't having the impact they once did. But guys, I mean, we're looking pretty good overall. Obviously not compared to all-time highs, but since bottoming at 60,000, we're just kind of ranging here. Brandon is the guy I go to for any trade advice, and his whole thesis is not trading this area. But if we get above 81K, that's where he's looking at longing again. But other than that, we're kind of just chopping here. So not a whole lot of stuff that's actionable at the moment, unfortunately. But let's talk about the Clarity Act a little bit. This obviously has a huge implications on what happens with crypto moving forward. We're seeing reports now that the Clarity Act faces late April deadline, and the delay could push passage beyond 2026. And this it's a big problem because after the midterms, I think it's going to be very difficult to get this thing passed. You have to have bipartisan support. And I actually talked about this a little bit in this post. Cynthia Lummis has been talking about needing to get this thing done. Everyone's talking about this markup that needs to be done, but there's still a lot of steps left, guys. Like, the markup, it still needs to pass the Senate with Democratic support. So this is the key part, right? You have to get this passed by the Senate. After the midterms, this could be very, very difficult to get done. You also need reconciliation between the banking and agriculture committees, and it still needs to go through House and Senate reconciliation before it can hit the president's desk. So there's a lot of steps there. And there's a long summer recess that legislators don't meet during. And then when they get back right before the midterms, it's highly unlikely they're going to get this on their schedule. So we really don't have much time. And I would imagine we're going to start seeing the odds of the Clarity Act passing dropping as we get closer to that date. We're already down to 48% now. So we are seeing it's up a little bit since I looked earlier, but we're also seeing on Kalshi 38% that's done and 41% that's done this year. So we're seeing on the charts here a lesser and lesser likelihood of the Clarity Act getting passed. And really, I think, unfortunately, if it doesn't get passed this year, we're looking at probably under the next president. And it might not be under the terms we want. So we'll have to wait and see how that plays out. I mean, that's another thing with Trump getting so involved in crypto and making so much money off of it. There's a lot of ammunition now. If we see a Democrat win in the next election, they've got a lot of ammunition to go after crypto after what we've seen under Trump. So I hope they get this shit done, man, because otherwise he could have done a lot of damage to our industry in the longer term. So that sucks. Well, let's keep our fingers crossed. We still have hope for now. Let's talk a little bit about prediction markets, and we'll get into crypto and we'll get into deep end stuff. So did you guys see this? There's the soldier that was part of the Maduro operation, bet that they were going to take him out of power, and won I think it was like $400,000 or something. So, internet saw it. They're like, there's an anonymous trader on Polymarket netted hundreds of thousands of dollars from long shot bets that Maduro would soon be ousted. They've arrested this soldier now. It's the first known example of U.S. Authorities charging someone with insider trading on prediction markets. But it does go on to talk about there's been several weird bets. There's a lot of investigations right now in the Trump administration. not just on prediction markets, but huge positions on oil, like 10 to 15 minutes before he tweets stuff all the time. People are making billions of dollars off of his announcements before they take place. And it's super sketchy. Kalshi's been suspending certain users that are in politics from insider trading. It says they're not referring them to the Department of Justice, just like, not allowing them to bet. Kalshi also took action against a candidate in California earlier this year. And regardless, it just seems like there's a lot of insider trading taking place. So we'll see what happens. I thought this was kind of funny. Trump was asked about this guy being arrested.
Mr. President, apparently, are you concerned that federal employees are betting on these prediction markets and potentially getting rich?
Well, I don't know about it, but was he betting that they would get him or they wouldn't get him?
It sounds like he was betting on his removal from office, that Maduro would be removed.
Well, that's
it sounds like
interesting.
he was involved in the operation.
That's like Pete Rose betting on his own team. It's a little like Pete Rose. Pete Rose, they kept him out of the Hall of Fame because he bet on his own team. Now, if he bet against his team, that would be no good, but he bet on his own team. I'll look into it, yeah?
So basically liken him to Pete Rose. Interesting. I mean, he did bet on his own team, I suppose, but regardless, insider trading is rampant right now across the board. It's freaking nuts, man. All right, let's get into some deep end stuff. I know that's what many of you guys have been waiting for, so let's break into it. But the macro stuff's important, y'all. More than ever right now. All right, let's talk about WingBits is live. They had their TGE. If we look at where the token's doing right now, as expected, is down a little bit. Actually did a little bit better than I anticipated to begin with, but sitting at under an $8 million market cap now. I mean, shoot, if this thing gets low enough, it might be worthwhile taking a stab at a position here. I got to look at what their unlock schedule looks like. I don't know if it's been updated. Sometimes let's look at CoinMarketCap and see if they have it on there, but I would imagine probably not. Okay, I don't want to log in again. Let's see here. I don't even think they really have a profile on here. Yeah, I don't think so. So look, I think that there's a potential, buying opportunity here, but I'm going to let this thing play out a little bit. I mean, we saw this with 375 AI. Anybody launching a token in these conditions, there's going to be a sell-off, right? And I think that people are going to be getting unlocks on a regular basis that have stations. So you have to think there's going to be more selling. You don't have any, as far as I know, I don't think they have any huge revenue doing any market buys and burns for them. So you have to rely on speculative buying. So I don't know, man. But here is something that's interesting. Like FlightAware is one of their big competitors. I mean, they're bringing in estimated 27 to 47 million per year. I mean, there's a market here for sure for them. So the big question for me is, can they get that revenue coming through the door? If they do, I mean, if this thing starts dropping, if we get down, below a $5 million market cap, I'd probably look to get a position of some sort into it. But I'm not pulling the trigger right now. I'm kind of waiting to see how this plays out. That's how I'm treating all these TGEs right now, man. Like, because we saw this with 375 AI, which I think is a much better project, in my opinion. Granted, there's the same month of, October 10th crash, but still, we saw that drop significantly in the month or two following TGE. I wouldn't be surprised to see a slow drip or slow bleed out here for WingBits. And I'm fine with being patient. And if it takes off and I miss it, fine. DABA, same type of deal here. Like, we saw a big surge up and we've seen it drop off. It's bounced a little bit, but sitting at a market cap of $20 million. That's their FDV. I wonder what their actual unlocked market cap is. That would be something interesting to look at. Let's see. Let's see if CoinGecko has it. So they don't have, they've got to come in here and update their circulating supply here. I'll just look at their tokenomics. But right now, FDV of 41.8. I mean, I have stations. I've been selling my tokens. You know, like it's kind of nice actually. You get tokens every day for having stations. So personally, I've been selling because I think it's gonna be the same thing. Like you've got a lot of people that, well, let's see the last month. So like, look at this dropping. Like all these people that have been waiting for a long time. Same with Wingbits. Like finally get tokens. You have to think that they're going to be dropping off, you know, and until they have meaningful pressure, buy pressure from revenue, what's going to stop that bleed, in my opinion. So that's another one I'm being patient with. I've been selling off my tokens right now, just knowing that I have tokens that are going to be coming in for the foreseeable future. And some I put into like some of my perp trading platforms to trade with. Some I've been like diversifying into other projects. So like my plan is not to add to any of these projects that have just had TGE. It's to wait it out over the next month or two, wait to see how much it bleeds out. And if it gets to a point where it's attractive, then I'll add to positions. But right now, I just don't think it's a winning strategy, at least for me, to be buying into the write-off TGE in these conditions. One that's done quite well is USDAI. So they are more of an IntraFi play, but they raise capital to invest in GPUs. But man, their token is actually up from where they TGE'd at. So that's freaking cool. They had a huge run up and then it's kind of started to sell off a bit. But I mean, this hits on the AI narrative. It's an IntraFi play. So they have actually assets that are yielding. So I don't know. I think this token could probably do very well over the longer term, especially with all the money we're seeing being invested into US or AI data centers rather across the world. So I think that's one that should be on your radar. I don't have position in this one. What are they on? The base? Looks like base, I guess. I don't know what that A is. Is that Algorand? I don't know. But I don't have a position in this one yet either. But these are ones that obviously are on my radar. So again, taking more of a wait and see approach. And if anything, I might trade this one a little bit. We'll see as we get like a lot more price history to see what the structure looks like. But for all of these, really, I'm not looking at adding like a spot position until we see a little bit longer price history. Until we see, I think they're going to continue bleeding out for a bit in these conditions before things bottom, in my opinion. So we'll see. All right, let's talk about some individual projects. Spexy has some new missions up. They moved to stablecoin payments. Of course, if you are a drone pilot, you can go out there and map with this project and make money, guys. They pay out in stablecoins. We don't know if they're going to launch a token. That's still in their roadmap as of now, but they've got a solid business. They're bringing in revenue. They're paying out stablecoins to drone operators. So if you have a Part 107, get out there and map, man. You can make some extra money. So highly encourage you all to check out that project. I have an interview with him. I haven't had time to edit because I've been so freaking busy. I'm going to plan on working on that a little bit today and tomorrow and hopefully get that posted soon. Akash Network, the GPU projects, if you look back at some of these charts of some of these projects like Akash, like Render, like Render's not something I have a position in anymore. I did before, but I think it's just overvalued. But Akash Network, Nosana, some of these GPU projects, 2024, they all had a crazy run. It's because of GPU shortages. The fact that half of US data centers are going to be delayed or canceled, we're going to have the same issue, guys. Like there's going to be another narrative around these decentralized GPU projects. Akash is one that very solid. I interviewed their founder recently, but I will say like market cap at 140 million. There's not as much. I mean, I still love the project and I think that their revenue is growing. That's all great. But if you look at something like Nosana, I think that Akash is a better project overall for sure. But like, look at the market cap here of 24 million. Like if you can find some of these that have a much lower market cap, there might be more upside potentially there. But I still think what Akash is doing is freaking awesome, man. And they are adding new types of workloads so that you can run AI agents and some of these AI workloads on their network. I think that's a project that's going to be around for some time. They're moving away from Cosmos, either to Solana or Base probably. They have market buys and burns. So pretty awesome, man. So I think you have to be looking at those GPU projects. All right, let's talk about Glow real quick. Glow is another InfraFi play, but across sort of deep end, where they're raising capital to invest in solar farms. So it's a really unique model. David Vorick, their CEO, was the early Bitcoin guy. Also, if you remember, like SIA Chain, he was one of the co-founders of that. Guy's super smart. I met him out at ETH Denver, and they list new solar farms every Tuesday. They've been selling out like pretty much immediately. And you can stake your tokens, you get return on your investment. So the whole thesis here is, a lot of these solar installers can get renewable energy credits or certificates, but for most of them, they're valueless, because a lot of the investors are kind of like, well, we're not going to buy these energy credits because we don't know, if they're going towards projects that really need them. What Glow is doing is finding projects. They analyze them. If they're like very, very close to penciling out, like let's say a solar developer wants to get a project done, goes to the bank, tries to get a loan. They're like, sorry, like you're super close to getting this thing financed, but like we can't underwrite it. They are then stepping in and closing that gap. So bringing in a small amount of money to get these things across the finish line, get them financed and built, and then they get the credits in return. And they can get a lot more money in the market for those credits because they can show, hey, our model is really working with projects that you buying these credits is actually making a material difference. So they're taking credits that would be otherwise useless. They have a market for them so they can make money on them. And they're kind of closing that gap to get solar built. It's a pretty freaking cool model. But the big thing is, if you look at their website, they have a new solar farm every Tuesday. Like I said, so 2 days, 8 hours. But like, look at their freaking token, man. I mean, I've been talking about them for a bit, but if you look back on the daily, like this is back where I met them in February. They're at 30 cents. They're up over 100%. So a lot of people moving into this project right now, and it's still in at $13.9 million market cap. Now, I will say, if you want to buy this token, you have to do it. Whoops. There we go. So here's the chart. But $13.9 million market cap. I believe if you want to buy it, you still have to do it on their website. And it is Ethereum-based token. But shit, man, like still 13.9 million. They are planning on adding not just one solar farm every Tuesday, but they're planning on ramping that up as well. So this is one I would keep on your radar, guys. Like solid team behind it. You could see this thing get to 100 million plus market cap. I think there's a lot of upside here. And they've got a freaking solid team. Let's come back to this one. Let's come back to that one. Let's go to Helium. Helium just had their Q1 report come out. Data transfer up 55% quarter over quarter. Daily active users up 47.9% quarter over quarter. Network offload at major U.S. events. They are working with the two telecoms they're working with in the U.S. have like 60% market share here. Telco CapEx evolving in Helium's favor. New deployer tools live. So they are really hitting it, man, on the financials and on the fundamentals. But obviously the token price has just not been great. And I think we know the story here, guys. Like it took them a while to find product market fit. And they gave out a lot of tokens in the early stages to people that really didn't provide much value. Like we, as IoT, and I have IoT hotspots out there, like they weren't getting usage. They weren't bringing in a lot of revenue. Like I guess they're getting some usage now, but like it's not a revenue driver. Let's be real. And especially really early on, before the halvings and everything, people were getting so many tokens, and you have a lot of these big holders from the early days that are just selling into all this success right now. And I think they've got to get through all those buyers or all those sellers and exhaust that. But you have years of dilution where now you're paying for that, right? You finally have the fundamentals and you have the revenue coming in, but you got to offset all that early dilution still. And I think it's going to take time. unfortunately. Like, so love what they're doing, but it's a good example of a project that, unfortunately, let's just be real. Like, they made some mistakes early on. They were major pioneers in the space, but like splitting off into 2 tokens and being so heavy with the rewards early on probably wasn't the best move. But if it weren't for Helium, these other projects probably wouldn't be here. So, you have to give them their credit, but that's why their token price is not doing well. They're paying for a lot of that early stage dilution, unfortunately. Now, once they get through that, I think we could be off to the races here. But was it $186 million market cap, and they have 20 million in revenue? I mean, I don't know that it's like super undervalued either. I think if we continue to see revenue growing, I don't know what percentage of the revenue is going to market buys and burns. But regardless, you have to love what Helium's doing, but it's going to be a little bit, once they get through that early dilution, I think they'll be all right. So assuming they have enough runway to make that happen. I saw HiveMapper. If you're driving around any NFL city with a B, you can get I believe you can get a free dash cam to map with. So that's interesting. Someone said on the stream yesterday they're doing like USD payouts for. I haven't seen that, but maybe I don't know if that's true or not. But regardless, HiveMapper got a weird predicament, man. Like, it's the opposite of what we saw in the last market cycle, where people would map or contribute to the network, but there's no people actually using the network or no revenue on the other end. They've got more people that want to buy the data. They just don't have enough data. They got to get more mappers. Part of that's self-inflicted, right? They should have done a better job with their community, in my opinion. Tokenomics were kind of screwed up, obviously. They've got to find a way to get cameras in people's hands. So it looks like they're doing some things. So that's smart. They've got tokens to work with, but let's see if they can make it happen and turn things around here. Up 9.7% over the last week. Still, under a $12 million market cap. I mean, it gets to a point where like it might start to look attractive, but they've got a kit. For a while there, they're very good about showing their token buys and burns, but I haven't really seen many announcements around that. Like, I think that would go a long way if they could be transparent about that again. That was nice for a little while there, but they've got to connect the fundamentals to the token. They've got to get cameras on people's hands and get revenue through the door. They've got a lot of it there. The big thing is they need to get people mapping. I don't know, man. They got tokens for the community pool to use, so they should think about that. Aoki, new partnership. They also are working on a deal that would triple their revenue, so they're freaking crushing it. Obviously hitting on the robotics sector. I don't know. They continue shipping, man. Like, this team just continues to build, and they're freaking crushing it. And their token price, I mean, they're sitting at $23 million market cap. This is going to get to the point where it's very attractive too. I wouldn't be surprised to see this thing hit, a couple $100 million or more in a bull run. I mean, you're looking at, in my opinion, I think we could easily see a 10x here. Like, they're hitting on robotics. Robotics is going to be a theme that is massive as things return. You see where the money's going in Web 2. There's just tremendous amount of upside here. So if this continues dropping, like, I'll look to add substantially to a bag here. All right, let's talk a little bit about Silencio. I saw they actually came out this morning. I think they've got some new campaigns running where if you can collect like siren data from like ambulances or police, I believe that they have like some sort of like campaign to collect that type of data. It's really weird. I imagine there's gonna be like this niche data. You're working with AI labs. These labs are like, hey, this is the type of this is the type of data, like they can say this type of data we want, and they can create a campaign for it, and they can get people. I mean, it's like the power of DeepN, guys. Here's one thing that gives me a little bit of pause, though, I will say, is that they said, hey, we are fully committed to our white paper, this is in their Discord, to returning value to token holders, full stop. And burns have already started. So they burned $270,000 worth of SLC. That's great. They show it on chain. But they did say right now, company financial health comes first. Chasing buyback optics before we have stable, reoccurring revenue puts the whole network at risk. Systematic buybacks and burns resume the moment we can do it responsibly and consistently. So it sounds like they're putting a pause on that, which don't love it. But, you know, in these times right now, especially with the market down, like I get needing to keep runway for your business, but I would like them to have more of like a clear cut, like, hey, this is when it will resume versus like an open ended, like, yeah, we're going to do it when it makes sense. Like, that doesn't give me a whole lot of confidence necessarily. That said, though, $872,000 market cap, they've got a massive pipeline for revenue right now. Like, if they resume buybacks here and they continue to bring in that revenue, like this one could be super undervalued. This could be one of the big winners. But I don't know, man. I didn't like that messaging necessarily. And I mean, this is such a low market cap, though. Shit, man. There's just so much upside from here. It's hard not to want to add to my bag at this point at that type of market cap. But again, like I just don't love like when you discontinue buybacks and burns like that without like set metrics on when it'll resume. It's just like it's just putting trust in the team. I don't necessarily love that, but I don't know. We'll see. Let's look at Ex Machina real quick. So this is a robotics fund, basically. But look at their ROI on some of these, like some of their placements. Like their 1X stake is up 119%. You've got their Apptronic up 103%. So some of these early stage investments they've gotten into are freaking killing it. They're going to have their TGE in May. So that's certainly one to look out for. And then this one right here, Flight Grid, they're doing tracking on drones. So I'm getting them on for an interview here in the next week or two. Allegedly, they raised like $50 million, I heard. I don't know if that's true or not. I've heard that through the grapevine, but the drone space is growing so quickly. They don't have a token yet. I think it's something they're considering, but I think you just get paid in stable coins right now. I have to look a little bit into it. I'll do my research before I interview them. But this one, a lot of people reached out to me in the community and they're like, hey, you need to talk to these guys. So apparently they're doing some big things. So one to keep on your radar, one that I recently added on my radar. Not a whole lot of followers yet, so we're early here. But sounds like they're going to carve out quite a niche. Someone said, how long will it take for Hivemapper and Helium to go bankrupt? I don't know their financials. I mean, I know Helium said in the last bull run they had 7 years of runway. I don't know what their bank accounts look like. They both raised a lot of freaking money though, over the last few years. So it depends how much capital they are burning. Just because you have to think about it, just because the token's down, if they have money in the bank and they have capital that they can run off of for an extended period, that doesn't matter. They can wait it out. The business and the token doesn't necessarily, it should be more connected than it is with some of these projects, but I don't know how to answer that question. Many people think Hivemapper is finished, nobody mapping. But is that true? Is nobody mapping? Because yeah, there's that report that came out there like, well, look at the drop off from January to February, but that was because they ended the HTC. But since then, it's been moving back up according to the metrics. So I don't know that nobody's mapping. Nobody's mapping in maybe some of these deep in circles that people are super pessimistic in. But you have to think like this is the big reason why they wanted to have fleets. And everyone was so pissed. They're like, oh, they're going after their company fleets. Well, guys, like, unfortunately, in deep in crypto in general, a lot of the price action has been speculative. And if you're completely relying on deep in people, if your token price is down, you're going to have a fall off. So that's why Mapper, even when the market was up, was pivoting heavily to try to protect against that by bringing on companies that have fleets. So they still have a lot of companies that are coming on that are using their fleet tools that are mapping that don't care about the token. And I think those are like the best networks, man, when you don't have to, because people in DePIN are fickle, man. Everyone wants to freaking ROI in a week. Like, it doesn't make sense. So I think that was a really good move by them that they caught a lot of criticism for, but like, you can't freaking hate on them for that. Like, that was a good business move. Because like, even look at GeoNet, man. Like, GeoNet's a super successful project and their price is down. Like, their PE ratio is 6.5. It should be freaking 10 to 20 times that. It's just because of crypto, right? They're crushing it on all levels. So there's a lot that's out of your control. So I have to, on that end, I have to give Ariel kudos for that, man, because he knew, like, hey, if the market conditions screw us and we're completely relying on DePIN drivers, we're done. So that is why they made that move. So I don't know, like, is there a way? There probably are some dashboards to see what their overall mapping looks like right now. Let me see if there's a way. I need to sync things up here. Let's see. My rewards have been going up a little bit, actually. I don't know how to see. Yeah, I don't know how to see what the overall mapping looks like. But like, I know Ariel replied to some people and he's like, look, like, it's actually moving up. So I don't know, man. I think this thesis that like everyone's finished mapping is not true. I think that some of the DePIN people are, for sure. But I think a lot of their company fleets that don't care about the token rewards and are actually using it for their fleet management tools, I think that they probably have a lot of people mapping still from that perspective. But regardless, they also should have the community mapping, and I think that's something they need to work on. In my opinion, they have 3 billion tokens still to utilize out of the community pool. Like, put them to work, man. I do. Like, mathematically, at the end of June, they cut the rewards in half, right? That happens like every year. So mathematically, if the revenue keeps increasing, and they don't need to grow their network much at all. Like, there's certain little areas they would like to get more coverage, but dude, just do the math. Like, if they have less and less tokens going out and they have more and more revenue coming in to buy and burn tokens, eventually it has to increase. There's no way around it. Just mathematically based. I mean, that's how buying and selling stock or any asset works in the open market. I think they will succeed. Obviously, the speculative buying would help, them get there faster. But yeah, I have to heavily disagree with you that DePIN has to become a narrative. I think it'll actually be the other way around, potentially, that some of these projects that have enough revenue to push their token price up will decouple from everything else, and then DePIN will become a narrative because of the success. Is how I could see that playing out. Depends on when the market rebounds, though, obviously. All right, let's take a look here. I do want to talk about 375 AI really quick. So I talked about this a little bit yesterday, but guys, the real world data is so important and valuable, and I don't think people understand how big of a market's going to be. None of the industry reports, even that I look at, like, have an understanding of this. I'm looking at projections for real world data value. I don't think the market understands how important this data is going to be. And this came out this week, but Neura is out of Europe. literally sent robots to Amazon to use in their warehouses, and the payment they are getting in return is the data. Like, data is not only just the new oil, data is the new currency. And that's how valuable this data is. Figure AI, their CEO, came out recently and he said if they could get the right data, they could solve general robotics tomorrow. They don't have the data. And I know that NVIDIA is trying to get around this by using synthetic data. But we're finding out now that synthetic data causes major problems in these models, like if you're using too much of it. I know I mentioned this yesterday, but the other problem is, like, a lot of these AI models are using internet data. Well, now there's so much AI generated data in the internet that it's starting to have, like, cause degradation and model collapse. If you think about it this way, if you're trying to teach yourself something, right, it's this feedback loop. You have to introduce new inputs if you want to get smarter, right? And that's what's happening with AI models is, like, if they're just churning out data and then retraining on data that they generated without any new inputs, the model will start to overfit things and eventually you see collapse. And this guy right here, so I posted this. He is the CEO of Surge AI. So y'all should become familiar with this guy. Because Surge AI, he started it back in like 2020. They work with all the largest LLMs out there and help them in their training models. And this guy's a freaking multi-billionaire now. That no one even knows. His name's Edwin Chen. No one knows who this freaking guy is. But they're absolutely crushing it. They have under 100 employees. Insane. But I do want to play just the end of this clip here. I'm not going to play the whole thing. You guys can go. I posted this. You guys can check it out if you want.
Thrown out 10, 20 million. And so they actually then spend like.
He talks about the beginning part of this, about how he has customers come to him. They're like, hey, our model is like collapsing. What's going on here? He's like, are you using synthetic data to train your model? And they're like, well, yeah. And he's finding that it's taking them months of training with this data to realize that it's basically killing their models. And then they have to spend months removing the data and throwing it out. So it's like setting back these companies super far. And then at the end here,
multiple
he talks
months
about
throwing a lot of it out. Like, a lot of them will actually tell us they've thrown out 10, 20 million pieces of synthetic data because they found that even just 1,000 pieces of really high quality human data is more useful. Like,
so these companies are finding that they're throwing out 10 to 20 million pieces of synthetic data, and that they even have 1,000 pieces of real world data. It's more valuable than the synthetic data. And this is the guy that's working with all of the largest LLMs out there. He's the CEO of Surge AI, multi-billionaire. He's at the front edge of all the stuff that's taking place out there with this training. So you start putting together the pieces here, man. Like, the fact they're using synthetic data is because they can't get enough real world data. This is a big reason why Tesla has such a freaking moat right now, because they're doing all their collection with Teslas, with their humanoids soon, to get real world data for training. The market for all these other players out there is going to be huge. They're going to be willing to pay top dollar, but it has to be high quality data, has to be verifiable that it's real and not AI generated. And think about what 375 AI is doing, guys. Like, they're getting these cameras set up all over the freaking country, and they have verifiable data that's not AI generated from a known entity, and they're processing everything at the edge so they can get the parts of the data that are super valuable to the customers. So there is a huge market for them popping up with this move to physical AI. The other thing they talked about here is that they're pushing to complete their coverage in New Jersey. So 3 to 4 nodes left, going up over the next 4 weeks. So they're expanding. So they've hit New York, New Jersey, and Miami, LA. So where all the big ports are. There's a reason why they chose those locations. But their whole goal now is to just freaking scale, right? Scale up data collection. One thing I will point out, though, that's important here. 6-month vesting period ends or unlocks on April 29th. So in 4 days, if you remember, it wasn't like huge pools, but it is 6-month, 12-month, and 18-month. I think it was, or is it 6, 12, and 24? I think it's 6, 12, and 18-month vesting, there is an unlock coming up for that original 6 months on April 29th. So that could be some sell pressure that hits in like 4 days. It's not a huge amount of tokens though. I can't remember the exact number, but either way, I mean, we're still sitting at freaking $4.4 million market cap. Give me a freaking break, bro. That is silly. Whew. So wild stuff there. What about Daba? So can we make fun of Daba? I mean, they didn't have a great TGE. It took them 24 hours to get that sorted out. But after that, it's been smooth sailing, man. Like I can go in there, I can get my tokens every day. It's been pretty solid. It's just like a little bit of an issue in the front end. I think they overcomplicated it, frankly. But we'll see. We'll see how it goes. Like I haven't had any, other than the first 24 hours, I haven't had any issues. I'm getting daily payments. But we'll see. They've got to get. Are they done? Why? I don't think so. Yeah, I don't think so. Like, here's the deal. Like, there's still a lot of people out there that are like, oh, it's a. They want to call everything a scam, though. Like, oh, hyper scam. It's like, dude, they've sold data to Volkswagen, to Lyft, to like 15 different Web2 companies, right? And they scaled up a project that, out of nowhere. And it's just like funny to me that everyone's just like so quick to call everything a scam, but everyone wants to call people things a scam or like in their mom's basement. And they've never started a business, never done anything in any entrepreneur type of way. And like probably are very unsuccessful people that just want to like throw shade and be mad all the time. Like, it's really hard, guys, to start a startup and be successful. And then you add the crypto component. It's so difficult. I talk to these founders all the time. I mean, it's hard, man. That's not wrong. They have sold data. What do you mean that's wrong? How much data have they sold? They've sold their customers. They have market buys and burns, but they have been less transparent about their buys and burns, and that's one of the big bones I have to pick with them. But nah, man. Mad Ninja scam. Well, I mean, you can take that mindset, I suppose, but guys, like, I would say that yes, most of crypto is a scam. A lot of these things have been scams, but when you have like, I guess I have the luxury to be able to speak with these teams, right, and get to know them personally and know that they're working on businesses. So, if you can take that view, like everything's a fucking scam, that's fine. But I think that you're gonna miss out on some opportunity that way. But I think it's probably better to go that route than think like everything is above board. But I would personally, I would take a hybrid approach. But again, I guess it is nice that I get to talk to these founders and understand what they're doing, understand what they're building. And it's a little bit different that way than just reading a white paper. Of course, like it took me like 3 years of grinding to be able to have those relationships, right? So it's one of the very positives to having a channel and working with these projects, though, is that I get to speak with them. So biggest issue, placements being weird. The biggest issue I see is what you guys pointed out. Placements are weird. Yeah, it's hard to say because look, I will say like potential red flags for Daba. The fact that they have so many hotspots and so quickly, like that seems very difficult. Now, I think a lot of these groups they're working with, I think they're virtual swaps. I don't think they're probably new hardware put in. I think they were with another internet service provider, and they were able to virtually move them over to the DABA network. I think that's probably where a lot of that came from. But I still question like how they're able to scale that quickly. That seems crazy to me. As far as the locations go, they're probably relying on the internet service providers themselves to like mark spots. So who knows like how diligent they are about that. But I'm sure there's ways they can explain that away. But yeah, I mean, look, there's certainly like things that I think because they are doing the deployments, there's an extra level of transparency that needs to be there, in my opinion. And that's just by the nature of their business model. And that, to me, there hasn't been enough transparency. So is what it is. Let's see. So that's how I feel about DABA. How do we know these are? That's what I just said. As a business person, why would you bring a new tech project in the world of crypto? Well, ask Mike Horton. Mike Horton tried to do that. Tried to create a network before using DeepIn. He said multiple times in interviews with me, but also us just having conversation, like they couldn't have done it without DeepIn. Like full stop, man. There's no way that they could have built out the GeoNet network without using DeepIn as a way of doing it. So you can scale up participation in ways we've never seen before. I mean, that's why a lot of these different protocols have turned to DeepIn in order to do it. Now, you can make an argument like, do you need a token to do it? That's the open discussion. Well, it depends. Like Silencio maybe doesn't need a token. Some said they don't get paid till your reportings get purchased. Tasks can take months. Yeah. Well, I mean, it's a business, right? So I think the payments will continue to speed up, but they've got a ton of people recording, and then they're running a business because they're paying stablecoins, right? So they have to be able to know that they're getting payment for that data. So is what it is. So like people can ask like, okay, well, do they need a token or not? And everyone's like, well, just pay stablecoins. Okay. Well, if that's what you're doing, a lot of these projects, unfortunately, you have to ramp up participation before you get revenue. Okay. Think about like Helium, right? They had to go through a lot of trial and error. Well, GeoNet's probably a better example. GeoNet had 500,000 in revenue a year ago. They're up to 10 million a year in revenue now, but they had to have the stations there to then go and get usage on the network. So if you're paying on stablecoins right away, you're then taking money that you raised, capital you raised, to pay that out until revenue hits. Versus if you have a token, you can use that token to bootstrap your network and get participation and build up your network, and then you can bring in the revenue. You know, that's one of the huge benefits of DeepIn. So I think you really have to consider these things. Like you have to think about things from a business owner perspective. You can't just think about it as a DeepIn investor that when Lamborghini and when am I getting my ROI next week? Like you got to think about this from a lot of different angles, guys. I mean, it's a really, really difficult problem. And like Silencio, that's how they're paying out in stablecoins is like they're paying out once they get paid. And a lot of these businesses, you're net 60. It can take you time to get paid. And that's their choice to do stablecoins. Now, if they're doing Silencio token payouts, they could do it a lot sooner. They could do it more upfront. But a lot of these projects, you got to think like, I know everyone wants to just like throw shade at everything, but give me one sector of crypto that's actually producing revenue. Nobody outside of DeepIn. We don't know if DeepIn really works. We haven't seen real DeepIn, real world. I mean, how can you say that? Look at GeoNet, the largest RTK network in the world with 2,000% growth in revenue year over year. I mean, everyone that I know that's deployed a station is very happy. with their earnings. And even with the market dead right now, it's sitting at a $53 million market cap. And, you know, you have Mike Horton, who has businesses that rely on his network to Web2 businesses that would not exist without being able to use the GeoNet network, that rely on that network on a daily basis. So tell me how that's not success. I would love to know, unless you're just talking about the DePIN token price, even though it's at 12.34 cents. I mean, is that what you mean? Are you judging it solely by token price right now in a bear market? It's a piss ant in the world of tech. Dude, look at tech startups. Have you worked at a startup before? I've worked at several startups before. It takes years for them to, in most cases, to ramp up to what GeoNet's doing. Like, these are businesses still. Just because they're DePIN doesn't mean like all of a sudden it's like this magic miracle pill that instead of like a traditional startup taking years to ramp up revenue and become profitable, like all of a sudden they should be profitable day one. It's still a freaking business, man. So I mean, they've been extremely successful. And I think a lot of these newer projects that have revenue at TGE, I mean, they're flipping the script here, dude. You said, I'm disgusted with DePIN. We do have a ton of great projects, in my opinion. Like, look at Aoki has 2 Fortune 500 companies in the US working with them. They have grocery chains across Europe working with them. Very successful. They're on the verge of being profitable. Okay, so Aoki's crushing it. Silencio is working with almost every top AI lab right now for voice data. GeoNet has the largest RTK network in the world. Companies rely on them day in and day out for their businesses to run. Helium's working with the top 2 telecoms in the country that have 60% market share. Like, I can go on. Spexy is working with, with their drone mapping, working with huge Web2 customers right now that are relying on their data, man. I think 375 AI is going to be very successful. They're building things out, but I believe they're going to be very successful. Glow now has like 100 freaking solar farms under their belt. So I mean, you can go on and on and on. I think a lot of these projects can be very successful. I think a lot of the early ones, unfortunately, they you got to think about this. It's a very nascent industry. So you had Helium. Sorry. Yeah, exactly. If someone's very, very scared of the reality of all of these, why are they even here in the space? It's a good question, George. I mean, like, here's the deal. Like, where are you going to find this type of upside somewhere else? Like, you can get decent returns if you're in the right sectors in the stock market right now. We're seeing things really frothy. Like, if you invested in memory, right? SanDisk at the right time, some of these AI plays, but like these startups that, well, I don't know, bro. If you're just like pissed off and hate DePIN, like, don't invest in it, man. I don't know what to tell you. Like, where else are you going to invest in startups like you can here that are going into robotics, AI, data collection, all the things that are coming that have this much upside? Like, of course, in a bear market, everyone wants to like complain and say how much they hate everything. No one was complaining in March of 2024. Everyone thought they're freaking geniuses, But like, you can't invest in those types of startups in the traditional space unless you're an accredited investor or have a personal connection with someone and can invest, probably 20 to 100 grand, in some of these other startups. Like, this is a sector that, is really on the front edge of a lot of emerging technologies. and you can from freaking, from your computer, invest in them any amount of money with no no limit. You don't have to like come up with 100 grand and get in an early stage. But just like any startup, dude, like freaking 99% of startups fail. So you gotta like do the research, man. Like a lot of these aren't going to make it. I think a lot of the ones that we talk about though are doing some major things. Like last market cycle, we proved that you could use tokens to build out a network. And that was cool. That was new. No one knew that would work. Helium did it. And then everyone's like, well, there's no revenue. There's no Web2 customers. Like no one's ever going to use the network. And now it's like, oh, well, all of these projects have customers that are paying to use the network. And everyone's like, well, the token prices are down. It's like, well, yeah. So this next iteration, it's about connecting the fundamentals and the revenue to the token value. And there's a lot of smart people working on different ways to make that happen. And I think we're going to see it get figured out. But I think everyone just wants to like find a reason to be upset and complain, especially when the market's down. But when the market's up, everyone's going to be like, oh man, this is like the greatest thing ever. Like, it's just how it happens. But I think the other thing you have to consider is that you add the crypto layer on top of everything, you have a lot of inefficiencies. It's a nascent industry. So as you have market inefficiencies, things get super overvalued at times. They get really undervalued at times. And that's one of the things that makes this space really attractive is that if you're paying attention while the market's down, while everyone's pissed off and wants to complain, then you can get really good deals and really good entry points into some of these, man. Like you say you've been here since 2020. Well, were you buying in 2022 and 2023 after FTX collapsed? Because if you were, you probably made a shit ton of money in 2024. Or were you like, I hate this and I'm sick of it. I'm not putting money in until the market's up again. So that's a lot of people. But, if you took the same approach in 2022 and 2023 after FTX, you would have made a fucking ton of money, brother, in 2024. But again, it takes some balls to like be willing to make investments while everyone else says everything's over and everyone's pissed. So Helium has a major problem. Yeah, we talked about this on my space the other day about, I don't know if they're getting 50 cents a gigabyte. But again, like, I think you're really focusing on everything that's wrong with every project. And it's just like a very negative outlook where I think it's important to identify those things, but you also should look at this like from both angles, dude. Like, yes, the market's down. Like, look at crypto across the board, but look at a lot of the positive stuff that's taking place here. And I feel like you're just ignoring that. It's not just buying, it's selling at the right time. No shit, dude. Look at the fear and greed index. Here, let me pull this up for you. Bobby. Although that's not your real name, by the way. I know that now. Let's go to the fear and greed index. I'll show you. All right. How about this, Bob? How about this, buddy? I have videos out on this, by the way. Yes, you have to sell at the right time. Well, how about this? Remember when we saw the big run up in 2024? Right? Because we see a couple of peaks in every bull run. Well, when was a good time to buy? 2022 into 2023, when we were extreme fear, right? In that period, great time to be buying. Well, what do we see here? When we got up to 90 right here was March 3rd. It was like the week after it was like hit like 90 on March 10th. Guess what? We saw the market top 2 weeks later. Deep in projects had gone absolutely ballistic. Almost every single one of them. Even Demo got up to 70 cents right then, right? Nosana got up to like $7. All of them topped. I wish I get Oh, there you go. March 14th, 88, got up to 88. Anytime you get up to 85 to 90, within 2 to 3 weeks, things top. Okay. We saw this again Thanksgiving, right, of 2024. It hit 93. Guess what? We topped 2.5 weeks later. So you can use this as a good gauge on when to sell, but you're absolutely right. You have to know when to buy and sell and identify like, hey, things get overheated, things get undervalued, right? And especially in a newer industry that's super volatile, that has a lot of speculation. And I don't think there's anything wrong with that. I mean, Warren Buffett is sitting in hundreds of billions in cash right now. His whole thing is be greedy when others are fearful. Like right now, everyone's fearful and hates everything. And it's just super negative. Be fearful when others are greedy. And this is a great example of that, right? Knowing when to time the top of the market and DCA at the bottom of the market. And right now, Warren Buffett thinks that the stock market's super overheated. I tend to agree with him. That's why he's sitting in hundreds of billions in cash at Berkshire Hathaway right now, right? So even the stock market, the best investor of all time is saying, hey, there are times to be in cash. There are times to deploy that cash. And I think, crypto has a lot more volatility still because it's such a nascent industry. So I mean, all things you got to consider, man. But again, there's a lot of reasons to be, in my opinion, very optimistic about the space. But if you've lost faith, there's nothing wrong with just leaving, dude. You can invest in stocks, invest in gold and silver. There's a lot of things to invest in out there. But in my opinion, I just don't see that there's a better opportunity right now in any industry to be able to get access to startups in a space like crypto, where, let's be real, like the legislation set up, the institutional money and smart money has been accumulating. The financial rails are moving over in a sector, a niche right now that is moving into robotics, AI, and data collection that is going to be the next technological revolution, brother. And all of these, a lot of these are sitting under a $10 million market cap with solid teams that have real customers. I just don't see a better place to invest right now, in my opinion. But it depends on your risk profile, and you've got to believe in it. And you got to find projects you believe in, man. Obviously, we're going to have different outlooks on that stuff. So, boom, man, we are coming up on over 2 hours. This is a long stream. So, probably going to cut out here, man. I got some stuff I got to work on. It's already 4 o'clock. Sheesh. Well, y'all, I hope that you guys have a fantastic rest of your weekend, and keep dialing in, man. I gotta dig in and do the research and find out if you can find stuff that makes sense for your investment thesis. But the main thing, obviously, is just making sure that you are finding ways to make your money work for your money. There's a lot of opportunity out there, guys.